Hey there, everyone, and welcome to the latest edition of our Market Misbehavior podcast. I'm your host, Dave Keller. It's a pleasure to have you join me as we talk to top market practitioners, investors, traders, money managers, strategists, educators, authors, whoever we can get on the podcast to talk about their process, talk about the markets, and try to learn a thing or two about investing. Today we're going to talk with TG Watkins of Simpler Trading. I've known TG for a number of years. He's actually based locally here in the Seattle area, and he works with a firm called Simpler Trading and does a really good job of educating other traders on how to approach the markets using momentum techniques. You're going to hear TG talk about his proprietary indicator called the Moxie Indicator. He will describe how he uses that indicator to look for charts that are rotating from negative energy to positive energy. At the end of the day, I think that's really represents a tried and true process of, buying names that are breaking out on stronger momentum. We'll look at some of the recent charts that he's had success with, what drew him to those particular names, and what allowed him to stay with those names as they continued to go higher. And I think that's really important here in December of 2024, as a lot of charts have been going up. And I know a lot of people have been afraid to participate, afraid to jump into stocks that are already feel very extended. I think TG's description of how to manage risk during an extended uptrend was really well said toward the end of our discussion. You'll hear that we focus a lot on the small cap space, and that's been a consistent theme with a number of my recent podcast guests, looking at the conditions for small caps, which have not been particularly good in 2024, certainly expected to improve going into 2025. I think TG described those as well as anyone we've had on the podcast, but also talked about his three steps to identify that next small cap breakout name, and I think his three-step process is really an interesting one that I hope you enjoy. We also talked about multiple timeframes, and I thought his answer to that question in particular was really, really good. Thinking about the signal that often emerges on this short-term time frame and later becomes reflected on some of the longer term timeframes. So we'll talk about hourly charts and 15-minute charts and how you tie those into daily and weekly and even monthly charts as well. So we covered a lot of ground and highlighted some really interesting opportunities, and I think teased out some really impressive ways that TG is able to approach the markets through the lens of momentum analysis. So please enjoy my conversation with TG Watkins of Simpler Trading. So I'm excited to sit down today with TG Watkins of Simpler Trading. TG, good to catch up with you again. How are things these days? How are you doing?
Oh man, Dave, we're doing great. So the Moxie Indicator and the Moxie Room has really been blowing up. Basically, the conversation I think we're going to be having here is a lot about the small caps and what's going on there. I really excel at this kind of market, and we haven't seen this since 2020. And I did a great job back then, really had a lot of people coming along with us and following us during that really, really fun time when the small caps and the IWM were just exploding. And I'm starting to see those kind of vibes again, which it's just thrilling to see again. So it should be a fun time.
No, for sure. I'm excited to dig into it a little bit. When you, TG, when you think about the small cap space, we've obviously been, tracking a lot about the major markets, the S&P and the NASDAQ having remarkably strong years. I mean, some of the strongest years in record. Small caps now really starting to participate. What are the conditions that give you optimism that small caps could be a good opportunity going into the beginning of next year?
Yeah, so that narrative has been a very, very long narrative that has been built. You can see that the low for the IWM back was November of 2023. Around that time, the market knew that pretty much interest rates were kind of at their high. We went into the pause condition, and then there was starting to be chatter about 6 interest rate cuts in 2024, and they were like, oh, okay, the market started to wake up for that, and you could see that was that first kind of big move for the IWM, and so everyone started kind of getting excited about that. But then everybody had to be like, oh, okay, well, 6 seems like a lot. Maybe they're not going to do 6. And then it became, oh, well, maybe they're not going to do the interest rate cuts right at the beginning of 2024. And so you can see that the IWM didn't exactly throw a temper tantrum. It just kind of went into a holding pattern where it went sideways for quite some time. And then we actually did start getting interest rate cuts, or at least the talk about getting interest rate cuts. And that was kind of the next pop up. And we started to see some stats that came out that said, we saw the highest breadth, or we saw this, and we really started to see things kind of wake up. But again, they kind of had to fizzle a little bit because I think the next thing that was coming up was the presidential election. And you could see how the market kind of waited a little bit for that. And if you look on a monthly time frame, you kind of see things were pulling back. And where we, at this point, the IWM has worked its way up to its previous all-time high back in 2020 or 2021 even. And so there was kind of this resistance area. And so then we got the election and Trump was elected, and then the market took off. And you could just see that across the board. I mean, the S&P was up, the NASDAQ was up, the IWM was up, like a lot of things were up. And underneath the surface, a lot of tickers were just exploding. But they had started doing that when interest rates were coming down, because inflation was licked. We had interest rate coming down. It was starting to become a better environment for small caps, for growth. And this was a very similar phenomenon that we saw back in 2020 when Joe Biden got elected. That is when the small caps really took off. So I think when you have the right ingredients with interest rates and kind of a good economy and stuff like this, and you have an election coming up, once the market knows who the administration is, they're okay with that. They just remove the uncertainty, and now they can move forward and kind of just release it. So it's not that it's Trump, it's not that it's Biden, it's just, hey, we know who the president is. And now we can see that the market, especially the IWM, is making new all-time highs. And across the board, I'm seeing just a ton of small cap names just rocket. And it's great. I mean, this is an easy time to be trading, and it's really, really exciting.
It's so interesting. I mean, you didn't say the word seasonality, but you really, I mean, I think made the case for it very well, which is, this time of the election year, kind of November, December, once the market is out of the uncertain, who knows what's going to happen period, and into a little more clarity about what they can expect, the market tends to do pretty well, right? And we've seen that in previous election years, regardless of whether it's an incumbent elected or whatever, there tends to be that upswing. And 100% right. I think we're seeing it in small caps, along with other areas for sure. But small caps in 2020, I'm glad you pointed that out. I hadn't really looked at that, but the weekly chart of the IWM, you can see that pretty good rally there.
Yeah, I mean, even right there, look at where the gap in the breakout was. That was November 7th. That was the results of the election, and then it just took off. And we had the same thing this time around November 7th or 6th, I think it was this time. But I think the difference now, back then, everyone was home, everyone was trading. We had an influx of new traders. We had COVID cash. We had Jerome Powell with his money bazooka and the printer, and we had 0% interest rates. And so everything just went wild and absolutely exploded. And honestly, it really only lasted 4 months. I mean, I made 800% using trading just stock in 4 months. But as of February 15th, all my stops got hit, and that was the end of the market for the small caps. And you could just see that's where that flat line at the top was. And then it finally came back down. This time around, the bubble got popped, everything got repriced. If you go look at monthly charts on all these small cap tickers, you can see that they got just absolutely drawn down. But then they went into hibernation and they kind of rested for a year or 2 years. And some of them started to spring early, like Carvana and stuff like that. But now we're in earnest. We are starting to see these things across the board start to perk up. And again, not to be political about some of this stuff, but if you look at certain sectors, I mean, the fact that Elon Musk is actually now kind of close to the presidency, we're seeing Tesla do well. We're seeing DXYZ do well, which is SpaceX. We're seeing Rocket Lab do well. We're seeing telecommunications. We're seeing just space related do pretty well. And I think this is partly because we have somebody like Elon who's close and technologically advanced, and we're talking about space, and that technology is here and ready to go. And we have AI, and that's a whole nother sector that's going on. We have quantum computing, with deregulation probably. We have just a lot of things that the market is really grabbing onto and saying, yeah, let's go. And plus, we have interest rates coming down, and small caps love that.
It certainly seems like a really good environment for some of these themes to continue to strengthen for sure, TG. Listen, I want to look at some charts, but before we do that, I know some listening or watching may not be as familiar with the Moxie Indicator. What's a good chart that we could bring up just to sort of do a quick tutorial so that the rest of the charts we look at are going to resonate for people? Tell me what to bring up.
Yeah, pull up Reddit, actually. So Reddit has been my biggest stock trade so far. We're up 168 or 170%. Really fantastic. I mean, you can see right there, you see how this is a daily chart where the Moxie Indicator actually fired green. You can see the green arrows right there. And that tells you that the Moxie Indicator, which is a momentum-based tool, tells you that energy momentum went from negative to positive, and that's the crossover. Plus, you had price cross over the daily 50, and that was your go signal. Now, I don't know if you want to or can pull up the hourly chart, but we got into Reddit even sooner because we saw the setup on the hourly basically do the same thing. Yeah, go back a little bit from before earnings and kind of show me the next time that we see right there. You see how the Moxie Indicator fired green right there? And it fired green as price pulled back into the hourly 50. That's a perfect combination, and that's where we entered. And then after that, you can see it started to support on the hourly 200 and just kept running from there. This has really been the most perfect setup and perfect stock. We got in right there, and as I said, we're up 170% or something, whatever the percentage is right now. I kind of lost track of it because it's doing so well.
Good problem to have, I would imagine, right?
Yeah, it's been fun.
So the general way the Moxie Indicator works, we have this panel at the bottom, which is really tracking, I would guess to describe it, the momentum. And then the arrows are illustrating kind of ideal entry and exit points. Is that fair?
Yes, it's just telling you when energy or momentum has gone from positive to negative. And when the Moxie Indicator is above zero, it's kind of like how much gas is in the tank. And so when it goes negative, well, you're out of gas, and now your momentum is negative. And we also look at divergences. So if you actually look just a little bit before that green arrow, you would notice that price was going down, but at some point the Moxie Indicator actually double bottomed and went up, even though price had not gone up. So underneath the surface, the Moxie Indicator was actually communicating to you that internally momentum has actually stopped going down, started going up, and now you're looking for price to kick into.
So just in the moments we've been talking about the indicator, we've gone between weekly, daily, and hourly charts. Talk to me a little bit about multiple timeframes and how you reconcile maybe differing signals. How do you sort of take all of those together to come up with a conclusion on a particular stock?
Yeah, I know some people, we have some traders that just, they only like one time frame, and hey, works for them. For me, I actually found out that I needed to look at all the time frames because it's like reading a book. It tells the whole story. And when I'm swing trading, I'm looking at the monthly, the weekly, the daily, the hourly, and even the 15, because one way you kind of think about it is like a snake. You know, a snake moves because its head moves first. And that's the same way that stocks move. And in fact, they kind of look like snakes, right? So if price is going to go up and if a new trend is going to start, that means the 15-minute has to go up. And if the 15-minute goes up, well, that means eventually the hourly is going to go up. And if the daily is going to go up, well, the hourly has to go up too. The hourly is not going to be going down and then the daily is going up. So it has to start someplace. And for me, basically, the 15 is the sharpest, the earliest time frame that I will look at to find that precise entry. Otherwise, it's really the hourly that I prefer to find a really robust trade or entry. And then, of course, we need the daily to be set up. And then I just need to know the context of what's going on with the monthly and weekly. And that's how it just tells me the whole story of what this stock is doing.
That snake analogy is awesome. I don't know if you know, I kind of wrote that one down. That's a good one. I don't know if I've heard that one before. I like that. And thinking of the head moving first. And you totally see that, right? If you do look at multiple timeframes, I've always said that the short-term timeframes, while it might not be your main kind of signal, any change will always get picked up on the shorter-term time frame first, and then it kind of gets reflected in the hourly, the daily, and others, right? It happens in the short term first. So looking for warning signs in the short term can be a great sort of initial red flag to detect some sort of change. Right, that's great.
Now, of course, you need to make sure that the higher time frames are set up for that. If you find a signal on a 15, but you're in a downtrend on a daily, well, it's not going to be a very good signal, or it's going to be shortly lived. You need to make sure everything is aligned, and that's what we had with Reddit. Everything was aligned. The monthly, I think it was over the monthly 10 SMA. The weekly was over its weekly 50. Things like that. Everything was ready for this thing to go, and that's why when I found my entry on the hourly, it was perfect. And then it just kind of kept working its way higher and higher and higher, and everything started to move.
What's your process? And I do want to look at a couple of these names here. What's your process for identifying like the next Reddit? Is it a scanning solution? Is it a, go through a bunch of charts kind of thing? Like, what's your process for finding ideas when the markets are uncertain and dynamic as they always appear to be?
I would say it's probably three things. One, the Moxie Indicator scanning. I can scan for price triggers and I can scan for trampling moves, basically dips in an uptrend. And
Got
then
it.
the other thing is I just go through a lot of stocks. I have a few watch lists, pretty big, and I just go through because I think it's also that was one of the things that when I was teaching myself how to trade the market, the more stocks I looked at, and I looked at them every day. Every day I'd probably go through 500 stocks, just clicking through it. And I got a feel for what the market was doing. I could see how things moved. And every day I'm looking at the same stocks and I'm just watching them. Most of them I'd never trade, but I could watch them and I kind of got used to what they would do and how their personality was and how it related to the market. And then after that, I really just kind of keep my ear to the ground. Fortunately, I'm in a
Mm.
position here to where I have a lot of other people who talk about stocks. We have a lot of subscribers who ask us questions. Hey, how about this stock? How about this stock? And honestly, APLD was another one where I had a subscriber ask me about it. And I said, that looks amazing. And we actually just bought it right there and it's still working for us. And so it's just kind of being in the area and listening to things. You can read reports, you can read magazines, you can just listen to forums. You'll come across stuff and not all of them are going to be great. Try not to listen to tips. But if you look at stuff and you say, that's an interesting name, I should know about that, add it to your watch list. And something like Reddit, when I heard that Reddit was IPO, doing an IPO, I don't really do Reddit or belong to Reddit, but I know about it. And I know a lot of people know about it. And I knew it's very popular. And I was like, that's going to be a good name. And so I just had to be patient for when that thing's set up. I even tried trading it the first time that it's set up and then made a little bit. And then it kind of took a break and now it took off. And I was like, I knew it. I knew it. I knew Reddit was going to be a strong name. Same thing with Instacart. That was another one that we traded
Mm.
twice. Once right after its IPO, and this last one where we've been in it for a while too. But yeah, look at APLD. You can see a couple of those Moxie price triggers right there.
It's great, and I love how you mentioned just looking at a lot of charts is one of the things you mentioned. I find so. I mean, I'm a big fan of scanning. I'm a big fan of having alerts that tell you might want to be interested in something. But at the end of the day, in my experience, successful investors, successful traders look at a lot of opportunities and then they find the best one. So I'm glad that was a part of your answer. I didn't script that for you, but I think the answer was very good. I'd love to. You've had a really successful, second half to 2024, TG, and congratulations on that. I'd love to just talk through a couple of the ideas that you've been looking at that have worked really well, and sort of what drew you to these names, and what sort of, I guess, what happened after you focused on them that confirmed to you that the trend was in a good place. We're starting with SOUN here.
Yeah. Well, SoundHound, I'll kind of start forward and go backwards. I'm learning that SoundHound is now more of a meme stock. My dad actually told me this. He's like, I don't know, watch out. I was like, Dad, actually, that's really good news. If something's become a meme stock, that means we're going to have a good time with it.
Yeah.
And so I think it's become part of Wall Street Bets or something like that. But I first heard about it, I don't know, quite some time ago. Back, I forget how cheap it was. It was even before its first big pop. And I just missed it because the news came out that NVIDIA disclosed that they had either ownership or owned some of their stock, or basically NVIDIA was involved with SoundHound in an AI kind of way. And that McDonald's and a lot of these other places are going to start using SoundHound to do their AI automated ordering programs. And so that had its first really big move. And I was like, this seems a little overdone. And of course, the market wasn't quite ready. So it had its run and then came back down. But I kept watching it because I was like, ooh, if it can do that once, it's probably going to do it again, especially with NVIDIA involved and then all
Yeah.
this AI stuff that's coming up. And so I just kept watching SoundHound on the monthly and weekly, and I could see that it was holding support pretty well. And it was just a matter of when this thing was going to go. And it definitely had a couple pops. We traded a couple times, we had to be a little agile. It didn't quite work. But then it started to really warm up, and I could see that the small caps are starting to warm up, and then interest rates were starting to come down. I was like, this thing's going to go eventually. And I did take a couple trades, a couple missteps here and there. And then I don't like to trade earnings. And so I waited after earnings, and sure enough, it came down on earnings. So I thought, that's good. I'm going to start buying this dip. And you can see the circle and the line where I started to buy it. Had to take a little bit of heat, but I've looked at the higher time frame. Everything was good. It's making higher lows, and again with the environment. And then when it started to break over the hourly 50 SMA, which was that purple, that kind of magenta line, we added to it. Then we got the Moxie price trigger. It popped up, came back down, popped up, came back down. Basically, it kept holding the hourly 50 SMA, which is perfect from a technical standpoint. And then we were pleasantly surprised. This thing launched last week. I mean, just okay, great. Happened to be better to be lucky than to be right. I mean, everything was working out. I had no idea it was going to explode like that. but we were already in, and everything was looking fine on it. And so we're just along for the ride at this point. And right now, that's a few days ago. I'm still watching this thing. It's flagged for about 3 days. It's still looking pretty darn strong. In fact, it hasn't budged, even though the IWM has come down and the S&P has come down. It's not budging. So I think that there's still more upside in SoundHound.
Yeah, a lot of other things sort of in pullback mode this week, but SoundHound, one of those examples, sort of not doing that. We have some others, some names like Reddit that you've mentioned before. Is there a consistent theme to some of these charts that again sort of drew you into some of these smaller names with compelling setups?
Yeah, basically just the small caps are coming alive. I mean, that's the theme. There's Tesla on there. I traded the leveraged ETF of Tesla because I don't really do options for swing trading. So that's how I got some leverage on that. That was a given, but I actually bought that one before the election and we held it through even earnings on that one. So that one I saw, if you look back to that date on the monthly and weekly timeframes on Tesla, I could see that there was a multi-year double bottom and that it was starting to break to the upside, a long-term trend line. So I just said, I think Tesla is going to go higher overall. And it just so happened, Trump, Elon, the election, that surged the whole thing, but we had already been in for weeks. So that's been great. And now Tesla's up at 400 or 400 something dollars. So we're doing amazingly well on TSLL. And then Bitcoin, same thing. You think small caps, Bitcoin's going to kind of run with the small caps too, interest rates coming down. And we had been watching Bitcoin not only make new highs like a year ago, but it started pulling back because it shot up too fast and now it needed to consolidate. And basically it did a kind of a nice gentle pullback for 7 months. And I was watching it come into support on the monthly and weekly time frame. And I just kept thinking, like, I know this is going to go. I know Bitcoin's going to be bullish again at some point. I just have to get the timing right. And sure enough, you can just start seeing that white line where I circled. There was a longer term trend, like a channel. Then you can see that Bitcoin started to break over that channel. And so what I did is I traded the leverage ETF of Bitcoin, which is BITX. And we bought that. And again, story tells the rest. It went up like that. And again, we're starting to see the miners start to warm up too. All of them are starting to surge. Now, they're a little bit crazy. They're a little bit wild. If Bitcoin pulls back, they pull back a lot. But I'm seeing that the miners in general are also starting to warm up on longer term timeframes.
And we're talking about Bitcoin miners, not gold miners there, right?
That's right. Bitcoin miners. Now, gold miners might be doing something too. Gold and gold miners, but man, they have been a really, really tough place to trade. So I'm just not even going there. Yeah, we're talking Bitcoin miners.
When you're looking at things like Tesla, like Bitcoin, and Tesla may be a good example. I feel like when you see a potential signal, there are a lot of levers you could pull, right? Just taking a long position in Tesla, taking a leveraged, product like you highlighted, using options, using other things. What sort of fuels your or informs your decision about what area, how to actually make that bet? Is there an intentional, this is the type of setup that I should use leverage versus this is one where it's just a long position? Like, does that decision look like for you?
Well, specifically something like Tesla and Bitcoin, for me as a swing trader, I don't really do options. I dabble with them on my own, but I don't put them out as a trade because I just, it's just not my thing. Okay. I'm not going to be making fancy butterfly trades or, put credit spreads or something like that. If I'm going to do options, I'm just going to buy calls. And I'm going to make sure I have enough time and probably at the money. And basically I need it to work. And, I kind of have a bumpy track record with options. And so I just don't do those publicly. But I like leverage, of course, who doesn't? So, but I like it in a linear form. I like stock. I like equity. And so now that we've had this new stuff come out where they have leveraged ETFs for single stocks like Tesla, Amazon, Nvidia, I'm like, cool, great. Now I can trade these names and actually make some money on them, because before, trying to trade, I don't know, Microsoft or Apple just trading stock, well, you're going to need a lot of capital and you're not going to get a ton of percentage. And it's never been anything I can do. And so now I can actually trade with leverage and actually get someplace with these. Tesla, I'm making like 100 to 150% on just stock because they have a leverage ETF. I'm good with that. I can make money with that.
One final question, TG, and this has been awesome. I really appreciate you talking through and highlighting some of these small caps that have really started to explode in a very good way. What do you do in terms of risk management when things like this have had the runs that they've had? I know hopefully a lot of people watching, listening are sitting on paper gains that they're probably very happy about. Yeah. What do you do now to make sure that you hold those gains and don't give it all back? What does the downside potential look like? Or what would tell you to maybe lighten up on some of these positions that have been so successful now?
Well, fortunately, I learned a lot in 2020 in a good way because a lot of these names were popping like 100, 200, 300% in a matter of weeks. And they just go vertical. And you're like, what do I do with this? Because it's outrun all of my support. It's miles away from moving averages. I don't even know what to do with this thing. And there's no perfect rule. And a lot of times it's going to be messy. But, hey, when it's doing great like this, it instantly gives you a lot of cushion to work with. And you do have to get the time right because a lot of these names, if they do go up, they do come down pretty hard, very fast. The best thing I can kind of say, and I've told my subscribers this too, is that when you get in a name that is going kind of parabolic, the best thing you can do is follow the 15-minute 50 SMA, and you'll know it'll follow that pretty well, and you'll know when it's kind of done, it will break that thing and it'll sell off kind of hard, and that's when you should either exit or take significant profits. Yes, it might be a major pullback, and yes, maybe it'll switch to the hourly chart, and maybe it'll find some support there, and you'll get a second round. But that's kind of the best thing I found. And once you get out or significantly reduce your position, you got to just step back, wait, and kind of look for the next setup, and you should be able to identify it calmly on something like the hourly and the 15-minute again. Just kind of wait for that to happen.
That's really well said, TG. I always tell people, let the chart tell you when something is different. I think you outlined a very interesting way of certainly doing that. TG, this has been awesome. It's great to see you again. I appreciate you coming on. Just for people that are less familiar and are just learning about you, where can we point them to learn more about you and your work?
Yeah, so simplertrading.com is the company that I work with. Otherwise, you can find me on YouTube under Profit Pilot. I think it's Profit-Pilot. And that's my YouTube channel. And we are telling you guys, we're having a great time. Not even trying to boast or promote this. I'm trying to sound the alarms to tell people this is kind of like 2020 all over again. We're having a really good time. I want to make sure that people who are involved in the stock market see this and actually get into this and don't miss it, because now I'm telling all the people I can say, now is the time to get aggressive because these things are working. And I really just want to make sure that people succeed, because I have people in there who are trying to trade for their grandkids. And this is the time to really make some hay while the sun shines.
Here's hoping. TG, great to see you. Have a great holiday. Fly safe if you're up in the air, and hope we can catch up in the new year, okay?
Great. Thanks, Dave.
So that was my conversation with TG Watkins of Simpler Trading. I hope you enjoyed that one. I certainly did, and it was fun to talk about a lot of different sort of ways to approach the market using the lens of momentum investing or momentum analysis. I didn't get a chance to ask TG, but I know that his proprietary indicator, the Moxie Indicator, is available on Stock Charts. ACP is a premium plugin. I know it's available on some other platforms as well. Whether or not you use his proprietary approach, I think his general way of describing momentum investing is spot on. I would wholeheartedly agree. It's a tried and true approach to identifying stocks just breaking out of a base, just rotating from a period of weakness to a period of strength, and following those trends to further strength has been successful for many traders and investors over the years. Two things I really appreciate about my conversation with TG. Number one, his 3 ways to identify that next big breakout. We looked at some of the names that he's had success with. I asked him about what he would look for, how he finds the next big idea, and I thought his answer was fantastic. I also liked how he described, sticking with something that's working, right? How do you, not leave all of those gains on the table? How do you follow a trend higher, but then make sure you get out in a timely management? Or how I asked him, how do you manage risk when a position has been working? And I think, he basically described how to let the chart tell you when the trend is no longer working. And I think there's a lot of wisdom there. Really love that snake analogy. We talked about multiple time frame analysis, and I think his thoughts on how short-term signals are often the first time you detect a change, but then it can be reflected in some of the long-term timeframes later, I think is absolutely spot on. I've done some work on that in my own process over the years, and I would wholeheartedly agree with his discussion there. A lot of fun talking with TG Watkins. I hope you enjoyed that one. And as always, I'd love to know who else you think we should interview as part of this podcast series. So make sure you drop a comment wherever you're hearing this, and let me know. I'm happy to approach whoever I can to have a great conversation with them. By the way, if you like this sort of thinking about technical analysis, market strategy through the lens of technical analysis, our Market Misbehavior Premium members may be a really good idea to help you on the next step in your own investing journey. Maybe a great year-end holiday gift to yourself, the gift of mindful investing in 2025. 3 great features of our premium memberships. Number one, our virtual courses. We start with the what I call the flight school, behavioral investing. We talk about behavioral biases. We talk about technical tools. We talk about your process and routines. And it's a great way, sort of a boot camp on how to make better decisions using the best practices of technical analysis. We have a number of other virtual courses, and we're always adding to that library as well. Second thing are our members only premium reports. Our core report is called the Weekly Flight Plan. We put that out every weekend. We look back at the week that just happened. What did we learn? We look forward at the week to come. What patterns, signals, levels are we on the outlook for? We also do a monthly chart review first of every month where we apply our proprietary market trend model to a number of different charts to focus on trends and trend rotations. Finally, we have an active members-only community where you have the ability to ask questions. You can get some of my latest ideas during the week. You can also hear some of the other members and what questions they're asking. They might even weigh in on each other's questions as well, but it's been a lot of fun to navigate the markets with a group of like-minded investors, and hope you can maybe participate as well. For more information, go to marketmisbehavior.com/premium, and don't forget to use the code podcast when you check out for 30% off your first 12 months on any plan. That's it for today. For Market Misbehavior, I'm Dave Keller. Remember, it's always a good time to own good charts.